Hey guys, Frank Curzio here, and I wanted to break down today's big deal, which is Chevron is buying Noble for $5 billion. At least that's the headline. It's more like $17 billion when you include the debt. But I'm going to tell you some of the details of why this is terrible for the oil industry and why it doesn't pay to really own oil stocks here. So let's break it down. As you know, I share my site here. I always like using sites that people can follow along. Let's go with the Yahoo Finance here. And now Noble's up 7%. It's a very small premium, guys, to what they're paying. So it amounts to about a $5 billion market cap. Let's look at the statistics really quick. This is important. So you're looking at a company right here whose revenue, you can say, wow, they generated $4.4 billion in revenue. This is TTM, means trailing 12 months. So this number is basically meaningless because this is pre-COVID, and we know that the whole economy is shut down. But we look at the balance sheet, $1.4 billion in cash, and then we go into how much this company is losing, $5 billion. That's a loss, guys, right? So you're looking at $1.4 billion and look at the amount of debt they have to pay. So when I bring in and we look at the debt schedule here, okay, don't want to get too confusing. So this is going to give you a debt schedule of their fixed payments through 1 to 5 years and out. So if you're looking at year 1, 2, 3, 4, 5, you can see the debt payments right here of about $1.7 billion. $2.3 billion is due over the next 5 years, and the company is getting crushed, right? Because they're losing, $5 billion a year right now. When I see this deal, and the most important point here is pretend that I told you you could own Noble 1 month ago, and I said you're guaranteed, absolutely guaranteed, that Chevron's going to buy this company out. Look at the premium here. You would have got nothing. I mean, this is the risk reward. This is why you want to buy. I mean, you could say this is a mid cap now. It used to be a large cap. But is the risk worth the reward here? Because if you look 6 months ago, this company was trading at 22. You look at a year, full year is 27 somewhere where it's $27. They're buying it for 10. Right, when you look at things like this, where a month ago you could have bought Noble and tell you that they're going to get taken over by one of the large oil companies in the world, and you're not going to make any money on it, it tells you that you have to avoid the oil sector because there's a ton of leverage. These companies are in big trouble. If you need more evidence, forget about the numbers and use your common sense. Everything's closed right now. Okay, everything. You're looking at more electric vehicles hitting the market. You look at less people driving. Is that going to change over the next 3 to 6 months? And that's important because this isn't a company, and oil companies can't afford to wait because it's the most highly leveraged industry in the world. So these guys are struggling. That's why Noble's accepting this deal, even though it's doing nothing for their shareholders. And a company like Noble is pretty good. It's not some crappy, shitty little tiny oil stock, but it just goes to tell you the small mid-cap oil stocks, there's no reason to go near them. It's the same thing in the gold industry. When gold was really bad, you saw the majors consolidating, and they're not looking to purchase small mid-caps in that industry. It's the same thing that's happening in oil right now. So you're removing that premium. You're removing that potential reward for you. And the fact that they're doing this deal at basically the same price it was a month ago after the stock is down, 60, 70%, tells you there's no reason to go into the oil industry or venture into the oil industry. It's going to stay depressed for a very long time. There's other places that are working, but for now, avoid oil, especially small and mid-cap companies. I'm Frank Curzio. As always, I'll report back to you soon. Take care.